Welcome to Cover Call Corner. I'm Denny Benson. These are my opinions and should not be taken as investment advice. Consult your investment advisor before making any investment. These transactions do have downside risk. Had a very interesting week last week with the reopening trade. We'll talk a little bit more about that later. But the stock of the week is Ford. And ticker symbol is F. Very simple. Two investing ideas associated with Ford, I think, right now. The electric vehicle Mustang is coming out late this summer, if things stay on track on their schedule. And there are other new vehicles, most notably the Ford Bronco. They're experiencing some constraints right now. There's a chip shortage, and it's affecting the F-150 production line. I think it's actually been suspended for a couple weeks. So that could hurt the profitability of Ford moving forward. Again, this is one that I've held Ford for a little over a month now, and I'm rolling this call week to week. But we'll look at it as if it was an initial entry. Let's look at the numbers. All right, as we always start with the options chain, we start with Ford, its ticker symbol, closing price at 12.30. The bid and ask was very close, so I'm using 12.30 as the purchase price. We need the call section, we need the expiration date. Notice it's Thursday this week. Friday is Good Friday. The market is always closed on Good Friday. So option expiration this week is Thursday afternoon, not Friday afternoon. So that's something to remember there. And then obviously we look at our strike prices, we look at the bid prices for selling our covered calls. This is calculating the maximum profit table. If you've been following me on this channel for a little bit, you know that I always calculate the maximum profit for various different option strike prices. I'm not going to go into great detail over all the different rows this week. You can pause and look at this and do your analysis based on this information. But I am, for this analysis, choosing the 12.5 strike for Thursday, April 1st. Notice that's a maximum profit of $33 and change on a total amount invested at $1,216. That's more than 2.5% in 1 week. I think that's very good. Even the call itself at $13.33, that's more than 1% of what you're paying for the stock, for a block of the stock. So I think that's a very prime strike price to look at for Ford for this week. All right, here's the profit loss table. Looking at the strike price at $12.50. This is our purchase point at about $12.30. We would still make, our $13 based on that alone if the price just stayed the same. And our break even goes down to $12.17. So if Ford was closed next week below that, we would keep the stock, or if we sold it at that lower price, we would experience an overall net loss. Of course, if Ford soars above $12.50, and notably 2 weeks ago it was in the 13s, we would not participate in that additional appreciation of the stock price. Here's comparing the calls of various prices. Again, I'll let you pause and look at this table, but as always, if you can ideally guess the strike price, then you will maximize your profit for the week. So you could write the 11 call for $1.31, I think, or $1.32, and you would still make $1 at 11 if the stock went down to $11. That's protecting your downside pretty significantly. If you think that Ford could possibly go down from its $12.30, $12 strike has a maximum profit of about $10 associated with that. Just slightly under 1%, but you building in some 2.5% downside risk in the stock price from its current closing price from last Friday. And then, of course, if you think that Ford's going to be bought out by Tesla or something and it soars to like $15 a share, then you wouldn't want to write a call. You would just go with the no call column, like we've discussed in previous weeks. All right, here are my thoughts. Can Ford really compete in the auto market? Well, it seems to be transitioning. It's always had the F-150 to fall back on. It is experiencing the chip shortage, which is hurting production of that vehicle. But auto pricing is strong. Take a look at the price of a new F-150. Take a look at the price of their new Bronco. What they're projecting, even before the $7,500 tax credit for the electric vehicle Mustangs. Ford is not going to be losing money if they can keep selling vehicles. Something I haven't done in previous weeks, but I did want to bring it to everyone's attention this week, was you can find out more about the company. One of my favorite ways is looking at the 10K annual report the company is required to file with the Securities and Exchange Commission. If you just Google up SEC 10K annual report and then the company name, then it will pop up. Usually there's a site that has a report called sec.report. This is not the Edgar database on the SEC, but it only has a few ads, but it's the identical report that is filed. It's pretty easy to navigate through it. To me, one of the first sections I like reading the best is the company's assessment of risks to the company. And this year in early February, they did mention a chip shortage and how that could affect profitability with the company. So it is in there. I think that the new Mustang Mach-E in the electric vehicle space, I think that when the Tesla 3 came out a couple years ago, there was a back order for many, many months. I think that's going to be the same thing for the Mustang. I think the Mustang Mach-E is going to be a strong competitor with the Tesla Model 3. If you get the super version of it, it's got supercar, performance numbers like 0 to 60 in 3.6 seconds or something ridiculous like that. I mean, that's really pretty amazing. I think that, as popular as the Mustangs became in the late 60s, there's a very good possibility by the mid-2020s that the Mach-E Mustang, the electric vehicle Mustang, could be a very popular vehicle. It's just something the styling is pretty good. But if the performance and the reliability hold up, and Ford doesn't have to recall too many of them, and that the battery life is reasonable, 200 miles on charge, 300 miles on charge, then I think that this could really be a real bump for Ford moving forward. The Biden administration moved to a lot of vehicles, government vehicles and EVs, staff cars. I think a lot of staff cars are going to be the base level Mustangs and the base level Model 3s from Tesla. I really do see that happening in the next 4 or 5 years. So really, I'm willing to hold and roll calls moving forward with the 12.5 strike week to week. Like I said, it was in the 13s. I've had this position for over a month. I'm up to 800 shares on it now. I bought the first 600 of it, most of it between 11.50 and 12. I did buy a block at 12.70 when it was up in the 13s. I did buy another block around 12.30 last week. But I'm very confident that the 12.50 strikes week to week will generate at least 1% of income moving forward. I think it's a really good strike price to really look at this company. And now that it's below that strike price, this might be a good entry point for Ford. Please remember, this is my opinion only. And, make your own assessments. I do invite you to look at that SEC filing. So with any of the companies that I recommend week to week. All right, recent activity. There was a major correction on the reopening trade stocks on Tuesday. Many of them were down 10-15%. And notably Carnival, MGM Resorts, and American Airlines, they all went down 8, 10, 12%. But writing calls that were in the money, which I did, recommended last week with American Airlines, that really helped. So the losses were a lot less. In fact, I actually increased positions in American Airlines and in Carnival Cruise Lines last week to take advantage of what I thought was a dip in the stock price. I do have calls moving forward for Carnival at 27, American at 23, and MGM Grand at 38 and a half. So those are my current strike prices on those stocks. These three and Ford are still part of my current portfolio. I really do think that I'm going to hold on to them through Memorial Day as a minimum, because I think the reopening trade will begin to get traction, especially as young people get vaccinated. But find your desired prices and continue rolling the calls to generate cash flow into your account moving forward. I'm generating more than 1% a week if I keep it the same strikes. And I think that's what I'm going to be doing for the next 3, 6, maybe as many as 12 weeks moving forward. I think I have a real opportunity to make some very decent money in covered calls with these stocks. So those are my opinions. This is Covered Call Corner for the week. Trying to keep it short and sweet. I invite you, if you have basic investment questions or concerns, to look at my son Derek Benson, a recent MBA grad from the University of West Florida. He has his own channel on basic investing. I am very biased, but I think it's really good. I invite you to take a look at it. But if you like what you're seeing on Covered Call Corner, please feel free to email me at coveredcallcorner@gmail.com. I will look at that. I have set up that Gmail account for this information. You can make comments in the section beneath the videos. I hope you like these videos. I hope you subscribe to them. I think I'm picking companies that have real value and are not, I did pick Tilray, the first one, but I've stuck more closer to companies that I'm holding in my portfolio for the long haul. And so I think that's where we're at. If you have a particular company you want me to do a covered call analysis on, again, you can email me at coveredcallcorner@gmail.com, and I will take a look at it, and maybe your idea is what I pick and do in a future week. So with that, I hope your week is profitable, and I hope to see you again next time. Thank you for your time.